Good morning, everyone. We're just waiting to dial into the conference before we start. Guys, are we good to go? Okay, I'm going to have to kick off. All right, welcome everybody to what is probably officially our first working group session for the ITaC project. Really glad to have you guys today, and this is really going to be a regular thing. We hope that you certainly enjoyed your drinks and your coffees. It's going to be four of us presenting today. It's myself. Martin will then present. I'll do sort of the intro, the whole ITaC overview. Martin will present the trading stuff. If I should, I probably advance this. Martin will then do the trading system overview. Alex will give us a clearing system overview. And then Brett will take us through a little bit more detail around the collateral management and the end-of-day processing. Okay, purpose of our working group. So most of you know what this is all about. It's about us having regular checkpoints. It's about giving you the right information at the right time so that you can get yourselves ready and integrate your systems, both for yourselves and your clients, to the JSE services. I think one of the things that's really important for us is that this is not the only forum for us to communicate with you. We will be using various forums like the advisory committees, like the broker forum, etc. So there are various platforms that we will use. This is just one of the platforms that we want to use to focus on specifically the technical interfaces and the functional interfaces around the trading and the clearing solutions that we're going to be presenting. You are very welcome to give us input to the topics for these types of working groups. After all, it is for you. If there are things that you need us to cover that we perhaps haven't yet covered, we do have a whole list of topics which we will be happy to share with you. But if you want to give input, please just drop us a mail to ITaC and say, look, we'd like you to give us a session on bandwidth, or we'd like you to give us a session on connectivity. Those things are on our list, but obviously we're happy to add them in. So please feel free to give input. This is your working group, so happy you give input and participate. We published a service hotline last week just around these are the proposed dates so that we can get them in your diaries. I do apologize. I think there was a little bit of confusion between Kums and I, but we're getting ourselves sorted out. What we will do is we will book an appointment in your diaries for the rest of the year according to these dates so that at least you know it's coming. Prior to each event, we'll then just publish an agenda of the topics that we're planning to cover. You can then choose to accept or decline. And then obviously those guys who require teleconference or webinar details, we will provide those to you, obviously a day or two prior or on the day. The session that we're having on Monday, we would like to have a focus session with the CSTPs on Monday. This is really to walk them through the whole collateral management. We haven't really taken them through the detail of the ITaC project and the collateral management and how it's going to work. And that's what we'd like to use Monday's session for. And hence we've said, let's get the CSTPs in. I think we've done this a few times with the clearing members. The session that we're looking to have on the 28th of May, we're looking to cover the daily life cycle of the trading and clearing system. We are also looking at some of the risk management items that we want to raise with you. But again, I'll be publishing a detailed agenda. Look out for the service hotline. And again, we will put it in the appointment. Kums will say set up an appointment and put the agenda in the appointment so that you have it in your diaries as well. We are likely to add a few more working group sessions sort of August, September, but let's see how they go. At the moment, we do have them sort of weekly, some are 2 weeks apart. It's really, we're trying to center ourselves around, futures closeout weeks. Don't really want to drag you guys out for a working group session. In the week we have a market comms, don't really want to have a working group session so that we limit your need to come to the JSE to once a week rather than multiple times in the same week. I think it becomes a logistical nightmare otherwise. Just a little bit of a reaffirmation, I think, of what we've already covered in the March market comms around Project 1A, Project 1B and C, which we're going to be talking to you about. You're going to hear this quite a lot. So the program, as you know, is obviously two major projects. The first one being the equity market upgrade for trading only. We are targeting Q3 of next year for that. Obviously, we are dependent on the T+3 project, and we'll monitor that closely. As and when the timelines get more finalized, we will obviously give you more detailed dates. Project 1B and 1C is our equity derivatives market migration to the new trading technology and the new clearing system. And then obviously the same for currency derivatives. We will run derivatives, equity derivatives and currency derivatives simultaneously in terms of the testing and the sign-off, but we will deploy them separately. at least 2 months apart. And then thereafter, project 2 is our commodity derivatives, interest rates, and bond market migration. And those will come afterwards. We don't really have timelines at this stage for those projects. So equity markets, a couple of bug fixes. There are some minor enhancements which we may be putting in the system, but won't necessarily go live with. We will give you specs at least 8 months before the go live date for that. We will provide you a CTS environment at least 6 months prior to the go live, so you could expect that somewhere near the end of the year, beginning of the year. And obviously the first mandatory, we'll have some mandatory dress rehearsals. 2 months prior to go live, we'll hold the first mandatory dress rehearsal that you'll have to be participating in. And final conformance will be a month before go live. I think the equity market guys are very familiar with the process. So not too much of a change for you other than understanding the functionality. I think you're quite familiar with how we run the tests. Any new software providers, very happy to have sessions with you around how we do that. But again, it will be coming back to the working group where we discuss all the detail and the approach and how we're going to take this forward. In terms of project 1B and 1C, our equity derivatives and currency derivatives, the initial trading specs, both for trading and information, will be published 14 months prior to the go live of that system. And we will give you a test service for at least 12 months to go live. We'd like to encourage as much testing as possible, and hence why we'd like to try and bring these dates forward to give you a good opportunity to test all of your systems and services. In terms of clearing, again, we would like to issue specs at least 12 months prior to the go live, and we would like to give you a test service to at least 10 months prior to go live. So you'll have a trading system for 2 months, and then the clearing test system will kick in for you to be able to then integrate. And the nice thing about it is in the customer test service environment, what you generate trades in the test service environment will automatically feed into the clearing system. So you will have an integrated trading clearing system to test with. Again, mandatory dress rehearsals probably about 2 to 3 months prior to the go live, and final conformance at least 1 or 2 months prior to go live. Okay, the JSE shared infrastructure provider, for those for those who are not aware of it, it's really a shared infrastructure is defined as somebody or a provider of shared infrastructure to more than one JSE member, or it's an information subscriber that is also a co-location customer who wants to distribute JSE market data within Colo. We published the updated SIP policy last year before the co-location market go live, asked those guys to comply with it. It is a policy that's applicable to all markets. It's not yet rolled out to all the markets. We'd like to make you aware that obviously as part of the ITaC project, the SIP policy will be enforced across all the markets. And we will obviously give you good and due notice on that. And you will obviously have to comply with this. If you want to use a shared infrastructure provider, you will have to obviously go through an accredited provider. Anybody else, again, you'd like to understand a little bit more about the SIP, who's perhaps not a SIP, happy to have a one-on-one session with you, walk you through the document, explain the process. It's really not complicated. You accredit yourself once off. Thereafter, there's just an annual renewal just to check if you've changed anything, or if you change anything during the year, you just give us a notification of the changes. The other thing that we'd like to make you aware of, the JSA, currently we use it for the equity market. It is a legal agreement between us and the clients. Anybody who connects to the JSE, either to just connect or make use of production or test services, so software providers or developers are included in this, sign the JSA. It's a very high level around our obligations and your obligations. And then for each service that you connect to, there's a related schedule. What we'd like to do is roll out JSA for the other markets, interest rate and derivatives markets, and introduce the various schedules as we go through the projects as well. Definitely looking to implement this for the derivatives markets, perhaps somewhere during 2016, but we will give you more information as we finalize all of that. We'd like to get the legal stuff out the way so that when we get into the real meat of delivering the technology, all that stuff is done and dusted, and hence why we're proposing next year. Again, we'll have a detailed session on the JSA for those who are not familiar with it, just to walk you through what the JSA contains and the dates that we need to sign those off. The other policy that's going to be enforced during the ITaC project is the network service provider policy. We are in the throes of that right at this moment, getting all the current telecommunication providers at the JSE who have equipment in the JSE Meet Me room to comply with the network service provider policy. Both the SIP and the NSP policies are really principles that we request that the providers comply with around things like confidentiality of data, security of data, etc. And the good thing is, as I say, all current telecommunication providers are busy going through the accreditation. Any new ones who come along will have to get themselves accredited. The word for you guys is that to go live on the new services, you have to use an accredited NSP. So if you are talking to a new telco provider who's not yet an NSP, please make them aware, put them in touch with us. We'll get Nick and his team to chat to them around the requirements for that. Again, a very simple process. They give us a proposal on how they comply. We go through the documentation. If they meet the principles and we're satisfied that they meet the principles adequately, we will accredit them. And then there's an annual renewal just between us and them around different services that they may change or introduce. We just want to make sure that the guys that are going to be providing services, and typically because multicast data is an animal and often creates a lot of headaches for us, that they have the right resources and controls in place to manage that kind of connectivity. Okay, the front-end decision, I think we have said this several times, but we're going to say it again. We have given notice that we are no longer going to provide the trading front-end, the trading and deal management front-end for the derivatives markets. We no longer provide a trading front-end for the equity market. Third-party solutions that are currently used by many of the clearing members to replicate the margin and the fee methodologies is not a JSE front-end. It is provided by a third party to the JSE. We would like to, therefore, we are asking that clients start looking at what technology they'd like to use in the new environments and when the new systems kick in. One of our thoughts is, and I'd really like to get input on this, so ponder about it, give us a shout, drop us a mail. What we're thinking is to try and help you, because a lot of the guys are phoning us and say, okay, so how do I know who's got what software? We've been chatting to the software providers. We'd like to comply a list. We did get some information from them initially in the survey that we did around who will be providing trading, who will be providing clearing, who will be providing deal management systems. And our thinking is to maybe do a kickoff where we have a showcase day. We get all the software providers into the JSE. We have them set up their little stalls. You guys can then go to one place. You can meet with all the different providers just to get a high-level overview of what they offer. And then thereafter, as needed, set up your own detailed one-on-one sessions. So it is something we'd like to propose. If you guys think it's a bad idea or a great idea, or you'd like to make some suggestions on how we run that, please do let us know. I think the challenge we're having at the moment is how and when we time doing this. Because obviously we haven't issued detailed specs out, so a lot of the new service providers who perhaps don't offer derivatives, who want to offer derivatives, may know that they want to offer it, but they don't actually have a terminal to show you. Some of them already have a terminal, but it's not necessarily rolled out in a production environment, so they've got a beta version. Some of them have a terminal, and it is used in production, so we've got a bit of a mix, and hence why we want to just chat to the guys around, trying to give them enough information so that when we do the showcase day, they have a feel for where they want to participate, what they want to offer, so that when you come and meet with them, they can explain to you the spaces that they're going to play in. So you'll know which participants to chat to. Okay, I'm now going to hand over to Martin to do the trading system overview.
Thanks, Sandra. Good morning, everyone. So, talking about the trading system overview, what we want to do is just give you a quick overview again of the trading system, what we're going to implement with the ITaC project, functional overview, technical summary, just to go into a bit more detail on the derivative side, and then a proposed solution, architecture, and the interfaces after that. So just another recap of what we are actually doing in this project for trading. We're looking at a single instance of the trading engine, consolidated hardware, and consolidated single code base for the JSE. So this picture really is trying to explain to you that we have a trading partition 1 where the equity market will reside on, all within the same trading engine, and the trading partition 2 for equity derivatives currencies, and then 3 for commodity derivatives, bonds, and interest rates. All again, at the bottom you can see there's a JSE single code base. That's where we really are doing this migration, which is part of the 1A project, of everything on the same code base, and then being able to add the derivatives detail onto the system. Currently, for the equity market, we have a trading partition 1, as you can see on the picture, and we're sort of adding these other partitions onto it. You would have noticed a few of the messages in the current system have this partition ID already. Just a quick overview. You can look at the slide a bit later again. What we're doing is we've got your order management gateways in the green and your market data gateways. We have full On the market data gateway here in the middle, we've got a full depth MITch service, the unthrottled and throttled. That will be applicable to all markets. You will notice that on the equity market, we don't have we have a level 1 fixed gateway that falls away for the derivatives markets and effectively the all markets. So there's no fixed fast messages on the market data side that will be disseminated for the ITaC project. Breaking that down into the current equity market solution, you should be well aware of this already. We went through this during our JAI project a few years ago. Again, you've got your trading gateways, order management gateways, your post-trade drop copy, and your market data gateway system all feeding into this equity trading system, which will now effectively become your trading system across all of the markets. JSE downstream systems don't change. We integrate there exactly like we do for the equity market, incorporating derivatives. And your surveillance system is going to be used across equities and derivatives now going forward. The proposed high-level solution, you should also be aware of this slide already, for the derivative solution will be very similar. Again, your order management gateways, post-trade reference data, and your market data gateways. But you will notice again that there's no trade. The trading doesn't have the fixed trading gateway. Your drop copy is still a fixed gateway in your post-trade, but there's no trading gateway for the fixed protocol. Again, the bottom remains the same, exactly the same as this is now effectively another partition on the trading engine as we looked at in the first slide. Yes. Yes. Correct. Yes, so your market data again will be just the MITch protocol that we are sending down. So current equities has your level 1 fixed fast, and that will be incorporated in your level 1 MITch going forward.
So equities will continue
as is, yes.
Fast.
Yeah. For the current foreseeable future, yes. Yeah. Okay. Please stop me if there's any questions during the slides. I think it'll be easier to go through them then. Okay, just a summary again of this slide. What are we talking about? You'll see equities, equity derivatives, and currency derivatives for the moment. We'll have the native trading gateways, which is your order management gateways, but no fixed gateways with the red ends there. Drop copy, post-trade, the market data gateways for MITch, all applicable across the markets, and your reference data will work the same as an equity market as well, which will form across all of the markets. Again, where you get your reference data, the IDP service from the JSE every morning or evening, that'll be available. So that works exactly the same. The only change really is your trading fixed engine that's going to not be available there anymore for trading. So what do you do across all of these gateways? Native gateway will be your order management and immediate confirmation of on-books, your execution reports. It'll come back to you. Effectively, they are acts of an order that you've sent in, either being accepted or rejected. What we'll do is there's an enhanced message will be introduced for derivatives. Obviously, there's a few more fields and different ways you trade compared to equities and derivatives. So those fields will be added onto this message, and you'll have a basic message and an enhanced message going out on these trading gateways for the native trading gateways, one specific for equities and the other one to incorporate the derivative changes. We're not going to introduce the same message for equities that you're going to trade on derivatives. So there'll be separate messages, but using the same protocol. It'll all be in one document on the API specs available on our website as soon as we have it. The fixed post-trade gateway, again, is an enriched trade confirmation of the on-book. That's your execution report will come through. You'll still do your same-day on-book trade cancellations, and those are published via your TCR at the post-trade gateway. Your off-book trade reporting is submitted through the post-trade gateway, and that's your submission and receipts of these trade capture reports. That's where your off-book reporting will happen. So your trading happens native trading gateway. Your post-trade gateway will then use all of your off-book trading, and your management of all of your trades will go on the post-trade gateway. So the one native, the other one a fixed gateway. The request for downloaded trades, OTB, or own trade book download, will be done through this gateway as well. So if you have a loss of connectivity or anything, you want to see what trades you've done for the day, you will submit an own trade book download down the post-trade gateway. Gives you back all of your confirmed trades. For the fixed drop copy interface, it's effectively a copy to functionality that you can use. You log in with this comp ID, or you log in through this interface, and you'll get all execution reports as and how you decide to set it up down that gateway. The basic setup is on a firm level, so all of your execution reports, which is your ACs again from, ACs again from the order management gateway, they will be copied down effectively to the drop copy gateway. So you can have a view of anything that happens on the trading gateway down onto your drop copy. And these can be set up accordingly, Chinese walled or logical connections and so forth, which we'll have a special session actually on drop copy and PostTrade gateways on how to set that up so that you can have different divisions within your firm also getting different copies down the trade or drop copy gateways to segment your risk management and so forth further. The own order book download, OOBD, is done through the fixed drop copy. It's similar to the trades book download. It allows you to download at any given time your open orders per connection on the gateway. Just to give you an idea, again, once you've had a loss in connection or any system failures, you use this to do a recovery of what's open and what positions you're trading. Okay, any questions further on that also? Like I said, we will get into a lot of detail on how to set up a drop copy, what you can use it for, limitations and so forth in sessions a bit closer to the time when the details are out. Then going to the market data interfaces. So the market data message, we distributed using the MITCH protocol, as we mentioned. Your market data gateways for the equity, again, to go through it, your fixed level 1, MITCH full depth, fixed indices and fixed news remain as they are. The MITCH full market depth, as you saw in the previous slides, it has a throttled service and unthrottled service. All this means is that we are allowing more bandwidth through one of the unthrottled service than the throttled. It's just allowing you to, if you're connecting from outside through our client access network rather than from in co-location, it allows you around 3+ megabits per second to be pumped down, whereas the other feed is a bit smaller on, I think it's about 1.2 megabits. In co-location, obviously, there's no constraint on that because of the 10 gig interfaces. For equity derivatives, MITCH level 1, as we mentioned, and full depth, and this is going to be done per market. So for the equity derivative market, you'll have a feed, MITCH level 1 or 2, full depth, you can decide which one to connect to, and then for the equity derivative, the currency market, you'll have the same. So we'll segment them according to those markets. Yes, so currency derivatives will be added later. Again, the same thing. Okay, so this is how you'll receive your market data, different channels, different logins and so forth, and subscriptions. And this will all be, maybe we have to mention it, will all be Multicost Services. Right, derivatives market data interfaces, top of the order book. This will be the combined best bid and offer message will be disseminated down this book. Statistics, including an enhanced statistics message, will be incorporated within specific MITCH messages. And the intraday reference data updates will be disseminated through here as well. They are calculated somewhere else in the JSC systems, and they will be pumped out of the market data gateways that you connect to on the trading engine. That's where your intraday updates will come through. The same thing will happen on the full depth market level 2 gateway, as we call it. You'll have your full market disseminated sort of tick by tick. As anything changes, the full market gets disseminated. Statistics, again, will include an enhanced stats message, and these are, again, incorporated within specific MITCH messages. Your intraday reference data updates, any changes and so forth will be updated through here as well. So just to get the logic right again is you'll have your reference data file with all the meaty bits into it, name of the contract and so forth in an FTP IDP location, and then any updates that's sort of what you start with, any updates throughout the day to this are going to be disseminated through all of the market data gateways. Market data message types, so there's no difference in the market message types. Quite important that we will have like we mentioned earlier, we'll have a new order message, for instance, for the equity market and a different one for the derivatives markets for different fields that are not applicable to each of the markets, but there'll be a common message that will come out of the market data gateways per market data gateway. Effectively, what will happen is any fields that are not relevant for a market, you have an equity message going out on a trade or an execution, there's fields that are very specific to the derivative markets within that message, those will just be left blank. But that's all going to be in the API specs again. So effectively, you'll code to one market data message and you'll use it across all of the interfaces. The open interest will be derived in the clearing system, and we'll disseminate that again periodically through the market data gateways. Again, we'll have a session more on this in detail on how often we'd send it out and how exactly this will work as we get closer to that solution and the detail. Then just to explain Multicost Services again a bit further for sort of the derivative side now. Effectively what we have is we have a market data server that disseminates all the data. So your market data originates in one place and it gets sent out these two channels. So this line really represents it gets sent out at the same time. So one channel will go down to the market data gateway at the top and the bottom. And what we have here is, you can see there's a multicast MC, multicast feed A, and a feed B. So the same data with a sequence number will be sent out both of those streams and disseminated to you, the clients. You'll listen to these in general on two different lines and so forth. Again, we'll get into more of that detail once we get into how exactly the setup works. And what you need to do here is you need to do arbitration between the multicast feed A and B once it hits your system. So you will receive market data messages from 1 in the morning with a sequence number of 1 all the way down your 2 connections. If you miss message 10 on the A feed, but you receive it on the B, your systems internally are required to arbitrage between the two and continue processing as per normal. It is only when you miss a sequence number on both of these feeds that you will log into the system and re-request the data on a TCP connection to say, I've missed these amounts of market data messages, please resend them. You'll see that this connection is up only to the, if we call this the primary market data gateway. So the multicast feed A will always be your primary feed and B your secondary feed. In normal trading conditions, you will always connect to the market data gateway server on the recovery or replay service and get your data from there. If there's any failover or the A feed goes down and so forth, and the B feed comes up as the primary, this obviously reverses itself. But you will always, in normal conditions, connect to the primary market data replay and recovery channel first. Again, this will be detailed in all the documentation, and we'll have specific sessions on this. It's just to get you thinking about how to, the logical design a bit further. Just the bottom, please note, there's only one multicast feed. We'll be disseminating the event that JSE remote DR site is invoked. So when we move over to our remote site, only one feed will be disseminated. Okay, market data A and B, again, for redundancy, duplicate message, and the arbitration. So what we spoke about here is just, again, for you to reference later. The replay service is a small loss, so you've missed a couple of messages on the real-time feed. You connect to the replay service. The recovery service is a service for large message losses, and it effectively allows you to get a snapshot of what the market is doing currently, gives you a view of that, and then you just keep processing the multicast messages as and when they come in and update that view. So the two services are quite important to remember. There will be more details on this at a later stage. Client connectivity for JSE clients document will be updated, so we'll update all of these details into how you connect to us. Again, as we mentioned earlier with the NSPs, the policies, how you get in from co-location, all that will be in there. You will provide us, obviously, you connect from a public IP address from the client access network being anything outside which is not from co-location, and we allocate you a JSE private IP address in co-location because effectively you're part of our network, and that's what you connect to us with to interface. We will not allow you to use the same IP address for production and test services, because if you stop your test services on multicast level, we stop multicast on that line, and that will effectively stop you receiving multicast then on your production. So we try and keep these two separated, and for just purposes of having production running on one link or line and CTS on the other. Again, we'll get into more detail in that document on that, and for any questions, please refer to that. We'll also require connectivity to the JSE IDP server for access to the trading reference files, as I mentioned earlier. So you will log in the mornings or in the evenings when they become available, get your reference data for the next trading day, and be ready to process multicast messages when the engine starts up around 4:30, 5 o'clock in the morning. And then any changes to this reference data or anything will then be updated through the multicast MITch feeds as and when they happen throughout the day. Then we'll move on to input order rates. This is related to how many orders you are putting in per second. We will apply all of these. There will be applicable an inbound message order constraint effectively, so that we are managing market integrity correctly. So you will be limited to a certain amount per connection, per logical connection that you establish on the trading engine, so that we make sure that, well, market integrity is protected. So all the messages that exceed this rate will be rejected on a gateway level. In that way, we are rejecting them before they hit the trading engine. And numerous breaches of this, they'll still be defined exactly in the documentation when you receive it. Should you breach it within a certain amount of time, at a certain amount, you will be disconnected from the trading gateway. So it really stops too many messages coming in, and what we really want to do with this as well is you need to be quite aware of these rates when they come out and ensure that the systems that you're connecting to us through these various gateways or so are designed or maintained in such a way that these message rates are sort of pre-throttled before they hit us. Yes, we will reject your orders, but no one wants a rejected order on the gateway when the systems in the background are doing their thing. And these rates will be communicated at a later stage as we get more clarity. Before I move on to Alex, if there's any questions that you have now, otherwise I'll be able to chat later. Thank you. Alex.
Thanks, Martin. Good morning, everyone. From a clearing system perspective or post-trade perspective, we really just want to give a quick overview of the clearing solution. We have done that in the market comms and some of the other working groups, so we'll move quite quickly through that and then get on to collateral management. Brett will do a recap of the principles we covered on the 17th of March with the clearing members, and then get into more detail on the collateral management processes. Okay, so this is a table of all the clearing-related topics that we're going to be consulting with you on throughout the process. The ones in green are what we've covered before. Like I said, on the 17th of March, we met with the clearing members. And then the ones in bold are what we're going to cover today. Just to give a line or two on each of the green ones that we covered before, we talked about moving to a single integrated end-of-day process, so one margin run across all markets. That will position us to give cross-market offset where appropriate. It'll also achieve operational efficiencies, both in the margin and fees runs, as well as with collateral management. Collateral management I won't go into because Brett will. The front-end decision we covered previously, and Sandra went into that. Just to reiterate, we're really keen to ensure, particularly from a clearing perspective, that our clearing members have enough choice and enough options. So we're very happy to assist in any way we can. Just let us know. We will be looking to have that open day, as Sandra mentioned. The alternative clearing member concept was something that we covered as well on the 17th of March. We did say we'd put together a position paper based on some of the concerns raised in that meeting and practical challenges. We haven't prioritized that, so we are still looking to do that, but we're dealing with a number of other priorities at the moment. I won't go through all of the other topics. You can go through them. Do let us know if there's a topic that you feel we've missed and that we do need to consult on. Of particular interest might be pre-trade risk management, which will be one of the upcoming ones. Intraday risk monitoring, which we tentatively looking to include in the 28th of May session. Okay, those are the remaining topics. As I said, we have given overviews of the clearing solution before, so I'm not going to take too long on this slide. In fact, I'm going to just move ahead. This is probably an easier slide to talk to, and it does cover all of the post-trade related functions. So for clearing members, you will need to interface to both the trading and the clearing interfaces going forward. On the left is the functions where you'll need to interface to the MIT API for things like monitoring of orders and trades, so the drop, copy, and post trade, which Martin touched on. Market data, including your open interest, you will get from the MIT market data gateways. If you need to perform on behalf of actions like capturing of report onlys on behalf of your members, that'll be via the post-trade gateway on the MIT side. And any trading specific reference data you would get from MIT. Then on the Sonova side, which is the clearing system side, you will get much of your reference data. We've been intentionally non-specific about exactly what you'll get on the information delivery portal, which is our end of day, start of day channel versus the Sonova real-time API, because we'll get into that in the detailed sessions on the interfaces. But you will get trade and position updates on the Sonova API. That is where you'll do your deal management. Client maintenance, which is performed by the trading members, will be on the Sonova API. Collateral management. Intraday risk monitoring, which is a new service we're looking to introduce, monitoring risk and exposure as trading and deal management is happening, and publishing those exposure updates and alerts on the API. And then all other info for end-of-day balancing you will get either on the API or on the IDP portal. So fees, fee model, fee parameters, mark-to-markets at end of day, all of that will be available. And with that, I'll pass on to Brett.
Everyone's technology. I'm going to have to get used to this. Good afternoon, everyone. This introduction, I'm Brett Kotz. I head up the operational team for the PostTrade Services, involved very much with the operational side with the clearing members, etc., on a daily basis. I'm going to go through a bit of detail in terms of what we're doing around the collateral management side of things that has been discussed in this market literally for the last 4 or 5 years. In fact, we actually refer to it as a non-cash collateral that we are looking at doing. As I mentioned, this started about 4 or 5 years ago where we started the investigations. We actually put it on hold for various reasons, and we're now using the opportunity of the new systems coming out to actually pursue coming out with non-cash collateral. So it's to go through a bit of the details behind this. It also does touch on the actual flows that are happening on a daily basis in terms of calling that collateral. As I've mentioned, it is quite detailed. Now, if I can get this into work, there we go. So some of the principles that we originally came out with when we started 4 years ago, and more recently in the last couple of months where we've had discussions across the market. On the securities collateral, we have agreed that we'll accept securities collateral for initial margin, including add-ons, which is for your liquidity in large positions, settlement margin. And we have mentioned in our previous discussions the default fund contributions as well, which clearing members have to put up to the clearinghouse. We are just confirming from a legal perspective that you are allowed to do that, so we're just finalizing that at the moment. What we will not accept securities collateral for is the additional margin. There is a legal constraint. So additional margin is where the trading member or clearing member asks for additional margin over and above the initial margin asked for by the clearinghouse. Legally, we cannot take securities collateral around that. So it's going to be ZAR cash. It's going to be called for additional margin where the clearing member or trading member calls for it. And then the variation margin, which is obviously your profit and losses, will continue going as ZAR cash on a daily basis. We have also mentioned previously that the clearinghouse will set a minimum percentage of collateral that will be called on ZAR cash. So we're not going to allow 100% to be done as non-cash collateral. We will come out and say 80% will always be in ZAR cash with 20% as securities collateral. We haven't finalized those percentages, so those are merely examples at the moment. The clearinghouse sets it at a global level. At the next level, the clearing member can ask for more cash than securities, and the trading member down to the client can ask for more as well. So if we ask for 80% cash, the clearing member for their trading member, individual trading member could ask for 90% cash, and the trading member down to client could ask for 100% cash. So it's actually set throughout the levels itself. No one can exceed the 20% collateral that we're asking for. So you can't make it 30% where the clearinghouse has set it at the 20% level. The securities that we're going to accept in the initial phases is the equities top 40, the liquid government bonds. And as time expires, we'll then look at other securities, silo certificates, etc., in terms of taking that as collateral as well. In terms of the haircuts on securities collateral, this will be used calculated using the stress testing methodology. So obviously, if you give us a value of R1 million that is discounted by a haircut in terms of market moves, liquidity, and volatility, we would give you a value of 900,000 Rand based on that stress testing methodology. And then the valuation of the collateral will be valued daily according to current market convention. And I'll go into a little bit more details as I'm going through the slides, but that's actually valued by Straight to provide the collateral management system, and the JSE values it. So there's 2 different valuation agents that will value the collateral on a daily basis, just to make sure that the value is correct. We've also previously communicated that we are looking at the pledge mechanism. As everyone is aware that there has been ongoing discussions in terms of out and out transfers, STT that's applicable around that. It's progressed quite nicely in terms of the tax legislation that's actually come out recently in terms of the STT exemption, which has not been finalized. But even about all of those discussions of what's actually happening at the moment, the JSE has agreed that we would prefer to go with the pledge mechanism. And to a large extent, that's driven by the administration that sits behind this, because with the pledge, the CSDP and the client retains those assets. It's pledged or marked as pledged on Straight system, which gives us the protection that we're looking for. The trading members and clients will pledge directly to the clearinghouse. So the construct that we're looking for is that the client doesn't pledge to the trading member, who then pledges to the clearing member and then pledges to the clearinghouse. It will be directly to the clearinghouse itself. And again, that's driven partly from a legal perspective, but the other part is that the legal construct loses its legal construct as you go through the different channels. So if it goes to the trading member, to the clearing member, to the clearinghouse, if the client defaults, there's a whole link of events that take place before you can actually assess or access the securities in terms of the default itself. And then the last part, and we did mention, or Sandra did mention, that we're meeting with the CSDPs next week, is the auto-committing by the CSDP. So every time there's a pledge or securities movement, the CSDP who owns the client's account has to go and commit to this transaction. The problem that we've got is that our end of day runs for the clearing members at about 6:30, 7 o'clock at night. To get the CSDPs to commit at 7 o'clock at night is going to be difficult, because they would literally have to keep their systems up and running and staff resources sitting there until 7 every night to commit to these transactions. So what we are focusing on is having a discussion with the CSDP, saying that this is going to be constructed in terms of the JSE's rules and directives, which gives us the permission to actually call for those securities collateral, so you don't have to commit to the transactions straight. We'll technically do it on your behalf. And as I've mentioned, this is a meeting that we're having with the CSDPs next week to see how we actually progress it. And again, that creates the automation, which you'll understand as I'm going through the details of the slides. The one thing that we just wanted to mention as well is the portability. So where a client moves to another trading member, or a trading member moves to another clearing member, the securities will be ported as part of that process. So normally when we do this, it's on a Friday evening, and on that Friday we do our last call against the clearing member or trading member, depending on which level it is. On the Monday after the actual transfer itself, the old clearing member is liable until that evening, and then the securities will be automatically ported to the new clearing member or trading member. So that whole process would be governed and structured through our systems in terms of the automation that we're looking for. The other part worth noting, we have mentioned in previous meetings and workshops before that we are or have been investigating foreign currency collateral, and we said we'd do it as a subsequent phase. We are investigating potentially using this in or going live with this in our first phase, so it's still under discussions. We are meeting with the regulators and various parties across the market to see how we actually progress this and if we can take the currency collateral. Typically, this would only be for non-resident clients. So resident clients, in terms of exchange control, you can't hold foreign currency in South Africa, so this would be more towards your non-resident clients being able to put up currency collateral. Same thing would apply if once we have finalized this, is that there's going to be haircuts in terms of the valuation, the spot pricing that's associated with that, and all the stuff that kicks in. But once we have got more finality around this, we'll set up another session with the clearing members just to explain what that impact is going to do. And then the last part is that obviously anything that we change in the structure in its entirety, but more specifically on the collateral management, the JSE's rules and directives will also have to be updated to cater for non-cash collateral. And those will go through the normal governance procedures, which will go through the clearing members, the trading members, and the markets to make sure that they are comfortable with the changes that we are doing. But the high level behind this is to give the protection to the clearinghouse and the clearing members and trading members in the case of a default situation, amongst many other things that we have call against those securities that we can liquidate and trade those positions out. The next part also is that as part of Straight's process, and I'll go into more details as we're going through the slides, is that a prerequisite is that you, as a client that is a collateral giver, you have to set up a segregated depository account on Straight systems. That basically allows Straight systems to work out what securities can be given up or pledged or sent out in terms of out-and-out transfers from that SDA account. So that is a prerequisite to actually go into the systems itself on a Straight perspective. From a JSE's perspective, we will then load those SDA accounts in terms of the clearing member, trading member, and client. We will cover this at a later stage in terms of what that process is, but we need to obviously confirm with the clearing members that they're happy that their trading members can give securities collateral, and obviously to the next level with the clients, before we actually start loading those SDA accounts into the system to allow the securities to be processed as collateral. So there is quite a big process that kicks in behind this, which we'll go into details in subsequent workshops. And I did promise you a lot of detail, and here comes the detail. So typically, and I may not go exactly to the point itself, I'll try. As part of our end-of-day process, and Alex mentioned this earlier on, and we've had workshops around this, we are going to have one end-of-day process going forward once ITaC in its entirety is live. What that basically means is that we will no longer be balancing per market. We will give you one figure as a clearing member, and we'll balance at that one figure with the clearing members itself. That figure would still be made up in terms of the initial margins, variation margins, settlement margins, and the booking fees and everything else. We will then balance between the two parties, and the focus here is to very much come out with a very automated process. So you'd get a message from the system saying we are finished for today. Clearing members would then have to balance back to us and send us a message back, and on receipt of that message, a whole process will then kick off as part of that process. So to the slides itself, so the total exposure is sent through to the clearing member comes back and says their balance. Once we've got that confirmation that there's a balance, we will then work out what cash can actually be given as securities collateral. So I've mentioned that 80-20%. So if a client has R1 million exposure and we say 20% can be given up as securities collateral, we will then calculate that and send a message through to Straight's Collateral Management system saying for 200,000 Rand, does this client have securities available for pledging? On Straight systems, they will have the eligible criteria, the maximum per instrument type, and the haircuts, and they will then apply this algorithm and logic within their system, and they will then send a message back to JC Clear, RTC system, confirming that the pledge request has been confirmed and what securities have actually been pledged, which will then be updated in the RTC system. Once we get that, we will send an update to the clearing members confirming what securities have been pledged. And at the same time, we'll then work out what the PCH payments are. So the balance will be called on ZAR cash. The calculation will happen, and it will automatically generate a message to the SAFCOM PCH or JC Clear PCH and generate the actual cash payments on a daily basis. So this is all a sequence of events. Now, as I mentioned earlier on, the end-of-day processing is going to be done at 6:30, 7 o'clock at night. So this is everything that is happening around 6:30, 7 o'clock at night. On the right-hand side, the point 6 and 7, you've got your collateral pledge and commits by the CSDPs, and that is exactly what the CSDPs have to do. Is they've got to see the collateral pledge and actually commit to that transaction itself at 6:30, 7 o'clock at night. We will only we will only call for the ZAR cash once we've got the message back from Straight, but we will only take it into consideration once we've got that confirmation. So only once we've got the confirmation that we've received or the collateral has actually been pledged to the clearinghouse will we actually go to the next step. If we do not receive that confirmation, we will then automatically call ZAR cash around this. There's a lot of workshops going around this in terms of troubleshooting. So if Straight have system problems, what do we do? If we get a message, it's an error message, how do we manage it? So there's a lot of stuff that actually goes behind this, which will be brought through to the various parties as we go through the workshops itself. So the foreign currency would actually be the next step that's involved with this. So you'd have an SDA, the next would be a Nostro account. So once we've enabled their Nostro account, it will tell us that they can we can accept currency. We're expecting a Nostro account for US dollars, euros, and pounds, so looking at the top 3 currencies. And we'll call for securities collateral first. If it's loaded as an SDA, we'll then call for currency collateral, and then as the last, we'd actually do the ZAR cash. That's the initial thinking at the moment. That design hasn't been finalized, so we will come back to you. So it depends on what the Reserve Bank wants us to actually do and how they want us to call for that margin. And then with any process itself, we then had to go to the next level, which is that the client or trading member now wants to recall his securities collateral because he's now gone and sold the securities in the market. And he goes through a process, which going through the details itself, is that the client through a front end or through their CSDP will send a withdrawal request through to Straight on their collateral management system. Straight will send that withdrawal request to JC Clear. JC Clear will then send a message to the clearing member saying this client or this trading member has requested withdrawal of the securities collateral, i.e. you need to put up ZAR cash for this. Once we've got the confirmation from the clearing member that they're happy that those securities can be withdrawn, we will then send a message through to the settlement bank through SAFCOM PCH to call for that ZAR cash. Only once we've got the confirmation back from the settlement bank will we send an instruction back to Straight to release that securities collateral. So we will call for the ZAR cash first before we release any of that securities collateral back to the Straight systems. Now, obviously, in terms of central bank, in terms of settlement through central bank funds and everything else, they do have cut-off time. So we're looking initially at runs at 9 o'clock and 1 o'clock, but we need to verify that with the clearing members because obviously if we do a ZAR cash call, the clearing member's got to call it against the trading member has called it against the client. You need the time to actually do that, especially if you are working across banks. So we've got initial timelines of 9 o'clock and 1 o'clock, but the idea is that as we're going through the workshops, we'll finalize what those times are to make sure that the clearing members have the time to do the processing behind that as well. Also, with regard to the substitution, so substitution basically means that they substitute one instrument with another instrument. Technically, it's a like with like, so if the value of the collateral is R1 million, we expect R1 million to be given back to us in terms of the substitution itself. If it is not a like with regard to the substitution, it then goes into the withdrawal process. But the high-level impact or flows that's around this is that Straight will substitute those collateral based on the eligibility that we've sent through to Straight, and we'll get a confirmation that these securities have been substituted, and we'll send a confirmation through to the clearing member that Billington's was pledged this morning. It's now Anglo's. But again, there's no risk that's associated with it on the basis that it's a like with like process itself. And then the last part is that obviously securities fluctuate in terms of value during the course of the day. We will be looking at thresholds because we don't want to have these movements up and down to 100 times or 200 times a day. But the general idea there is that Straight will revalue their collateral on a periodic basis during the course of any business day. And where that collateral falls below a certain value, they will do a top-up request and send a confirmation back to JSE Clear to confirm that the securities collateral has been topped up to the correct value. If there is no securities value, or sorry, if there's no securities to cover that top-up, we will also be sent a notification saying that the client doesn't have enough securities. Depending on the amount, we suggest that you do a Zarcash call against the clearing member and the trading member as well. And as I said, that's revalued during the course of the day, all day. Questions? I get the last part. Questions? For anyone? Hey.
But please take in mind, I said on the IT side, right, so a lot of this pushes past my head. Currently, when we look at cap data at the moment, the JSE requires us brokers to actually calculate, to keep on top of cap data, from our perspective as well, because JSE doesn't have visibility of anything that applies to cap data. Makes sense, right? I'm guessing some of that will apply when we move to margin and to that perspective. The issue we face currently is trying to build something that is real-time calculate our cap data requirement based on orders on book and a lot of things, especially talking to rebells and things like that. Yeah. And we don't have all the information available. So some of the information we find on the JSE side is just not available in a already extracted systems, for example, unsettled trades. So that makes the requirement from us onerous, and that we just can't deliver on the requirement other than going to very intensive, labor-intensive process.
Yeah, and so that covers quite a few different areas. The first part in terms of the ITaC solution, we currently send files into the BDO system on a daily basis in terms of your margin requirements based on, that's not going to change. It's the exact same process, but that is still an end-of-day process. In terms of the messages and the gateways that we were mentioning just now, there's no reason why you can't get copies of those messages or the trades during the course of the day and build up your positions around that as well. And that's your gateways, your copy gateways that you can get that. That's the derivatives market. More on the equity side in terms of CAPA, because that's quite broad. That's bonds, it's equities. I can take that up with the business owner. I don't want to put Leanne on the spot at the moment, but we can come back to you on that to see if there is anything that's been built around.
Well, what if you want to do a real time? If you want to calculate your cap, because you've got to look at your some trades. What's the trade settles during the day? So it depends on what settles at that point in time. The cap time changes. The same as for the number of books or orders in the book. Historically, we scraped it off, literally did a screenshot off the day, except that now that it doesn't update the data each day anymore, so that information is not available. So,
and presumably you're not settling these trades real time like you can now, off the back of the T+C implementation. I mean, you're not doing the contract in real time and getting that information out.
No, because that didn't
So I think we'll take it as an item to take back to it.
Yeah, absolutely. I'll take it up with Chris. We'll set up a meeting and see what we can do around that.
It's unlikely in any of this that this would deal with this issue. We'd have to take it outside of the ITaC process. Because CAPAD, we are not doing real-time calcs. I can understand why potentially you might want to, but the JSE won't do real-time CAPAD calcs. It only does it as a daily activity.
Cool. Yeah. Any other questions?
Guys, thank you for your time. Yes, sorry.
And there got to be questions. Come on.
I got a question for Martin on the trading.
Martin?
Hi, I got a question for Martin on the trading side, and this is for June 30th. Is the JSE systems ready for the leap second impact?
Yes, so that's
Martin, you've seen a mic.
Yeah, I have. They've got it on.
The phone can't hear you. It's got to be.
Yeah. So that is something that we've looked at internally already, and to my knowledge, we are going to be ready for that. It's kind of covered within our current system design and all of those systems. I can give you a bit more information about it a bit later, but it's not a problem that we are foreseeing any changes on at the moment. No.
Okay, thanks.
It's a leap second impact that's happening on the 30th of June. Yeah, so no.
Any more questions? Are there any questions on the webinar? Nothing. Okay. Thank you for your time. We hope that today has been useful. As I say, we're trying to set this is like the base. We're really going to move into a lot more detail. There's lots of food outside. Please have something to eat before we go. Yes. Yeah, I'll be publishing it shortly. Thank you for your time, guys.